Hello guys, so we are gonna talk about equilibrium today. So this is gonna be day 18, I guess. So this is the easiest confluence which you are gonna learn from the whole trading video, I guess. But yeah, I guess this is the easiest one. So and it is a really important one which you can actually use for continuation. Okay, so if you are entering a trade, you can go for equilibrium a lot. Like I am going to show you what it means in a few minutes. So yeah, this is basically what we are going to use. So I am using the gan tool, gan box tool. If you guys want to copy my settings, uh, I'll show you my settings. If you guys are confused about why is my line looking to, it will be like a different way in your trading view. So this is how my setup is, guys. So you get this box. You can use other box also. You can use this box tool also with this 50% line. We just need the 50% mark. So yeah, depends on you guys. Okay. So what is an equilibrium? So uh, you just basically have premium and discount price. So premium price, just remember premium price is on top and discount price is on bottom. Like you have higher price as premium price. Like if you buy an apple, you have two shops. One shop is giving the apple for 105. One shop is giving a discount of 5 rupees. So the higher price will be on top and the lower price will be on bottom. So if you guys get confused like that, just remember it like this, okay, guys. So this price above this 50%, 50% is this point 0.5. Okay, we call this point, this line as equilibrium. So above equilibrium we will have premium, and below it we will have discount. So we will talk about this later. So usually what happens is we will be in a trending market. For example, right now we are in an uptrending market. So we go from the we take from the recent low to the most recent high. Okay, so we just mark the box, we just take this box, we just take this tool. I'll delete it again. So we take this tool, mark it from the bottom to the top. Okay, like to the top, like the most recent low. Always remember this, most recent low to the most recent high. Okay, always mark it from the recent low to the recent high. So you can see it'll come down, and after entering the discount zone. So this was a premium zone. So usually the market makers don't want to trade in the premium zone, so they usually push the market down. So they will push the market to the discount zone, and then they they will push it up. So this is seen commonly in every market. So this is a good confluence which you can use for entering a continuation trade. Okay, so this is what a premium and a discount is. So this is premium and this is discount. So this is basically equilibrium. That's all. That's all there is to it. That's all there is to it, guys. So if it's a downtrending market, for example, like this, boom, 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 boom. Okay, we take it from the what did we do? We take it from the recent high to the recent low. See what happened? It just went inside the discount zone and then came down. So that's basically the premium zone. When it's going down, downtrending, it'll go back to the premium and then come down. Okay. I mean, doesn't matter if you know about the premium and discount. So I just told you guys, if you guys get confused about this in some other YouTube video, they will say about premium and discount. It's the same thing. Equilibrium and the premium and discount, trading with premium and discount is the same thing, guys. So remember this point, write it down. We take it like we take the gam box from the most recent low to the most recent high, or the most recent high to the most recent low. If it's a downtrending market, okay, guys. I hope you guys can understand this. Okay, so we are gonna check a trending market, guys. Okay, so for example, this is the most recent low. I mean, I'm just giving you an example. And this is the most recent high. See what happened? It went and tapped inside this discount zone and started moving up. Another example, guys. If it's a downtrending market, okay. This is the most recent high. And uh, don't mess the recent high and recent low, guys. High. Mm, okay. This is also a small example of a premium and discount. This goes taps and then come down. But yeah, it just disrespected. I'll also show things which disrespects. So first, I got a first example which actually disrespect, and I'll tell you where to use it. Okay, guys. So I'll show you examples which actually respected this. So yeah, over here, let's see if it actually respected this. So this is the recent high, low to the recent high. Yeah, it did respect. See, the wicks actually went inside. Wait. Oh, so the recent high. See what happened? See what happens? It just went, tapped inside, and then moved up. See how it moves. And over here, this is also an example, guys. Is this an example? Did it? It just tapped in the equilibrium. Still, it will either tap or be above. Okay, so you could have always kept your buy limit or sell limit order. In this case, sell limit order over here. Kept the this thing over here. You could have gone for some this liquidity. So yeah, that is a trade for you. There would have been a win in one. It is a 1:1 trade, but you don't. I'm just giving you an example. So we usually pair this with liquidity sweep. Like we, this is a confluence which you're gonna use with order block and fair value gap, so that your entries will be proper. So let's look for a liquidity sweep. Let's see if things respected. Okay, this is a liquidity sweep, right? This was a liquidity. Like I have this crosshair. If you guys ever want this, see my crosshair. Like the line is there. So right click, settings, and then crosshair. You will have this, I guess, most probably. See, this one will be there. So you changed it to the line. So you get this. Okay. So now I don't have to always mark it. See, this is a liquidity sweep. Went down, swept. So this is the most recent high. I'll use this box, okay, to most recent, right? This was the most recent high before. I want you guys to think before this area, okay? Like I don't have the bar replay tool, so this green candle is yet to form, okay? I mean, I think this green candle has formed, so we will go for the equilibrium after that. So it went up, and we will put our buy limit order over here. Like we'll put our buy limit order exactly at the equilibrium, or we could have kept it in the fair value gap. See, there is a fair value gap also. There's an order block entry also. Three entries are there. Like this is an high probability entry, to be honest. Like really high probability entry. So you keep it over here. It respected the fair value gap. You can keep it either in the order block or fair value gap or equilibrium. I'm showing equilibrium for now. We're gonna talk about everything later. Okay. So equilibrium, we targeted this high, or let's see what this is the major high. You could have easily gone for a 1:5 trade. See that actually hit the target. See, exactly hit the target. So always pair whatever confluence I'm teaching, pair it with liquidity sweep. That's why the previous one which I showed, the second example which I showed was didn't work. Like now you guys will see most of them working if there's a liquidity sweep, guys. Okay, this one it didn't enter the, wait. Barely it didn't tap. So it didn't tap equilibrium. So ideally we want things to come inside this. That will be a better entry. But yeah, we'll see more examples, guys. Let's go for a liquidity sweep. Okay, over here there's a liquidity sweep. See over here. So we could have taken. Okay, this this is an example where people might mess it up. People might take it from the top, but yeah, don't take it from the top. I told you like the most recent high and the most recent low. We have to mark from the most recent high to the most recent low. This is the most recent high to the most recent low. So this didn't get tapped, or if we went for this high to this high to this low, yeah, it got tapped. See, this is just one candle, so we can actually go for this, I guess. So yeah, it got tapped. There was a order block entry over here as well. Order block, and this is an order block. So yeah, you could have entered over there or just entered over here, and you could have targeted the next points of liquidities. Like these are the points of liquidity. Okay, you could have targeted this. So you would have entered over here, stop loss over beneath this low, and then take profit on top of this high. You could have taken partial profit. That is the best way you could have traded. So even if you didn't take the, take profit completely, I mean, partial profit, you would have gone 1 is to 4.5 trade. See more examples, guys. Okay, let's go for a 50-minute time frame. Hmm. Okay. Let me see a good example of equilibrium, guys. Liquidity sweep. Hmm. There's a liquidity sweep over here. See, this is a point of liquidity. We swept it down move, recent high to the recent low. See, it got tapped, entered, and went down. One more example, few more examples. I hope you guys are understanding this. You could have gone over here also. Recent high to recent low. This is the black candle. The okay, this wick is a recent low. So came tapped inside. We could have entered over here, exactly over here. Stop loss, and this is an order block entry as well. Order block plus equilibrium. So it's a high probability entry. So you kept the stop loss. We could have given a target of this. You could have targeted this. You could have targeted this. You could have targeted this. So this was the point of the last point of liquidity which you could have taken. So it is a, let's see how good of a trade was it. So that was a 1 is to 9 trade, guys. But ideally we would have gone for these things. Ideally this was the trade. So it would be 1 is to 5 no matter what. So if you're risking $100, you're gaining $500, guys. That's the trade which we are doing over here. So I hope everything is making sense to you guys. So this is also an equilibrium. Let's see, down move prior to an up move. What is the down move prior to the up move? This is the down move prior to the up move. See, exactly, it went inside. You could have kept a buy limit order over here. Oh shit, I make this mistake a lot, guys. Okay. Buy limit order over here, kept your stop loss over here, and then boom, target the next areas of liquidity. This is the next area of liquidity. So That is a 1 is to 4 trade, guys. We want a 1 is to 4 trade. I hope everything is making sense now. So liquidity sweep. Okay, if you guys are new to my channel, I always say the same thing. Go watch the previous video, especially the liquidity video, the three videos which I've put. I That is the most important one. If you don't know, if you don't understand liquidity, then I don't know. You guys, that is the most important things, guys. Okay, this one. You could actually say this is a liquidity sweep also. So small example which is actually working. Down move prior to an up move. When tapped inside, boom, came down. Okay, let's see if this taps liquidity. Oh yeah, it did. See, taps came up, boom. You can use this tool, the rectangle tool. You can actually put the line. See, there will be a border. I mean, not border. There will be a middle line. Let me see. Let me see. I forgot where it is. Uh, mm, did I take the same one? Oh yeah, the middle line. Okay, you just double click on it. So if it's unticked, you just have to put a tick so that this line will come. That is a 50% mark. Okay, you don't necessarily have to use the GAN box. GAN box is also easier to understand. So I will use either the box, I mean rectangle or the GAN box. So you can also use the Fibonacci retracement too. But yeah, I prefer you guys go for these. So yeah, see, down move prior to an up move, boom, boom, boom. See, tap, enter, and then buy limit over here. Even if you miss a break of structure, this is how you can enter. So it got tapped into this order block also. So it is a high probability entry. Boom. That is a 1 is to 3 trade. I hope you guys can understand up move prior to a down move. This is also a equilibrium if you guys can understand. So up move prior to almost hit the stop loss, almost hit the stop loss, but yeah, came down, capitulated, boom, tick, and then went up. Uh, and then now, so again, I just paused a video. Sorry, guys. So yeah, again, there's this. Let's see if there's an example. Oh yeah, over here, you just take the highest point to the lowest point, and then equilibrium. You short, put a sell limit order over here. Target, I mean, stop loss over here. Take profit to the next point of liquidity. Either you could have gone for this. I would have gone for this, I guess. Maybe. I don't know. Depends on my day. So this is 1 is to 8.1. So I would have gone for this. This is at least 1 is to 2.6. Yeah. You could have even gone for this one. Boom. That is a good trade, guys. 1 is to 3. See, this is how the market moves. I hope you guys can feel how the market is moving now. See again, this is an equilibrium plus an order block entry. So yeah, this one again, uh, boom, up move. Wait, what happened, guys? Okay, see, you just start for the up move. See, it came down. You would have kept your stop loss over. You would have gone long over here, stop loss over here, take profit over the next point of liquidity. I would have gone for this. Rest is like, you know, if you get, you get. Okay, still it's a 1 is to 4.9894. Give you a few more examples and then we'll wind up the video. Does this hit the equilibrium? Is this a liquidity sweep? No, it didn't sweep the liquidity, so we won't do that. We will only enter if everything is properly aligned. Okay, properly aligned. So this is a liquidity sweep, right? This, see, you swept the liquidity. You wait for the up move. I don't know if it hits the equilibrium. No. So you, this didn't actually get, we didn't get the equilibrium entry. It just barely went on top. Okay. Sometimes this happened also, guys. Let's check for another one. I think the bar. Okay. Okay. This is a good. This is a liquidity sweep. Oh my God. Liquidity sweep down to up. See equilibrium. You would have kept our short sell limit order over here. We will only enter if it gets tapped over that range. Okay. This is why limit order is really important. If you guys don't know what is limit order, also made a video for that. Go and watch that. So I would have gone for this point, or this is kind of too far. So I wouldn't, maybe I would have gone for this also, yeah. So yeah, you just keep a partial profits over here. So it is a 1:5 trade. Boom. We should have waited for a long time, but still, you would have gotten your target. So yeah, guys, I hope you guys understood everything. This is all there is to it. Equilibrium. So now I feel like we just have to combine everything, and I'll teach you how to position size, how to manage your risk properly, so that you will exactly lose the fixed amount of money which you have. So stay tuned for the next video, or probably the next to next video. I don't know what I'll do. I will do the videos whatever however I feel like. Okay. So some days I'll feel like, okay, I'll teach you position sizing. I will go and teach you like that. So yeah, just stay tuned, and it will be taught in the the playlist which I'm doing, like learn trading from zero. At this point I feel like you just have to combine, so we'll make a video which combines every confluences together. Is there something which I missed? I taught you guys liquidity sweep, order block, fair value gap, equilibrium, and then I feel like I should teach you 79% extension closure. I mean, that is easy only. Like, we use Fibonacci retracement for that. Okay. So yeah, that thing we don't necessarily have to learn, but yeah, it is a good, indication for you to enter a trade. Okay. So yeah, I guess I will go for risk management and trading psychology next. I don't know. So yeah, guys, bye bye. So this is all for today. I hope you guys watch every single video. I hope you guys are taking notes, and good luck with your trading, guys. Like, you have to see, I hope you guys can feel how the graph is moving at this point. I give you examples. Watch videos repeatedly. You will understand. It's just 20 videos. If you can't even watch 20 videos, I don't know if you guys will survive in trading, because these 20 videos are the only things which you need to start your trading. 20 or 18 videos. I don't know how much. I think I did 18 video, right? Yeah. So yeah. Okay, guys. Bye bye.